Hello, everybody. I'm Natalie Brunell. Thank you so much for checking out my show, where I get to hear from the leading voices in Bitcoin, financial markets, political structures, philosophy, and more. Please make sure you're subscribed to the show. And if you're watching this on YouTube, like this video so more people see it and hit that notifications button so you don't miss out on any new content. This podcast does not provide financial advice. It is for educational and entertainment purposes only. So make sure you always do your own research before making any financial decisions and be aware of your risk tolerance. I'm able to produce this show thanks to my sponsors, and I'm very picky about who I choose to partner with. So I hope you'll take the time to listen to the ad reads throughout the show. All right, now to my main partner, Swan Bitcoin. Swan is where I do all of my Bitcoin purchases. In fact, I dollar cost average every single day, not every week, not bi-monthly, every single day. And they have the lowest fees in the space. I love Swan Bitcoin because it is a true Bitcoin only company. Swan has a ton of free educational resources on their website, and they now have a mobile app, which I've been using to smash by some Bitcoin. And Swan Studios produces my new show, Hard Money, which covers the biggest news in Bitcoin and the global economy. It's like an orange-pilled version of CNBC, so make sure to check that out on YouTube for all the biggest headlines, because we are not afraid to question the mainstream narrative. All right, it's time for the show. Thanks for joining me on this special episode of Hard Money and Coin Stories, where I am joined by the one and only Michael Saylor. And what a week to be doing an interview. Michael, thanks so much for joining me.
Happy to be here.
What a week. FTX melting down, no Binance buyout. You called this a teachable moment on TV. So what are the biggest lessons here?
Bitcoin, not crypto. That's the lesson. I think this week highlights the contrast between the virtues of Bitcoin and the vices of crypto. And it illustrates the wisdom of Satoshi. So if we go back to first principles, the entire Bitcoin movement got started because of a loss of faith in the currency and a loss of faith in banks. And so this has gone on since time immemorial: banking crisis that froze customers' funds and currency crisis that collapsed their purchasing power. And Bitcoin was created as a currency that couldn't be debased, running on an open network so you could be your own bank. And the principle is, if you're your own bank and no one has discretion to debase the currency, then you're not going to wake up one morning and find out that your funds have been seized and they've been devalued to zero. Crypto and the entire movement is almost like the reinvention of fiat currency and fractional reserve banking. But instead of it being in a regulated environment, it's just in an unregulated environment. So ironically, we saw the same human behaviors here. A human being creates a wildcat bank, unregulated. Then a human being creates their own currency, like the FTT token. Then they issue a bunch of it. Then they start to leverage it and borrow against it. And then at some point, they start to misuse the funds of their customers in their bank, and they use it to prop up their currency. Eventually, the currency collapses, the bank freezes its assets. People who had trusted the bank lose their assets. People who had trusted the currency lose their purchasing power. And so this is a teachable moment, because the solution is, don't put your value in currencies that are controlled by human beings. You can't trust a CEO, you can't trust a company, and you can't trust a custodian. And if there's a counterparty, it's credit, it's not money. And Bitcoin is nobody's liability. There is no counterparty. Anyone that joins the network is their own banker. The reason it's money is because no human being or no organization has discretion over it. So, and if anything, all of the Bitcoin memes have come back to life. Not your keys, not your coins. It's constant. And don't trust, verify. And it's sad to say that this is an incredibly expensive lesson in basic fundamentals of monetary theory and banking, and a principled way forward with your investments.
Well, the CEO that a lot of people were trusting was SBF, who issued an apology the day before filing for bankruptcy and another apology. What do you think about his mea culpa?
I think he got caught up in this entire crypto wave, and it was much bigger than him, and everything happened very, very fast. And in this particular case, it's still not even clear to him what happened. He'll probably register this or figure out what happened some number of years afterwards. So I think the humility of Satoshi is the observation that no one can carry the burden of that trust. Satoshi can't, no company, no board of directors, no government, no political process. At the point that you conclude that no one has the strength of character and wisdom and commitment to carry the burden of a billion people's money, then you realize that the solution is put the control of that into the hands of nature. Submit yourself to nature's laws and to the laws of mathematics, and then put it into the hands of a software that's not just a software program running on a machine, but a software protocol running on millions of machines. And so if you can create a fair, equitable, trustworthy, rational software protocol, if you can release it as a virus to millions of machines and hundreds of millions of people, you have a chance. You have an opportunity. It may work. And Bitcoin is the first example of a successful monetary protocol that was released. And in the first year or 2 or 3 years, it could have been smashed out of existence or could have failed. And now we're fortunate enough to actually see that it has grown to maturity and it is working, and it is the best choice in this crypto carnage. And for those who have clear vision and they can see through the sound and the fury and the chaos, they'll see that Satoshi was wiser than they realized. Satoshi said something very seminal at the very beginning of this entire movement. The root cause of all these collapses is the trust that is required, and that trust has been betrayed over and over and over again. The FTX collapse isn't the first collapse of a bank. It won't be the last collapse of the bank. And until human beings develop the humility to realize that trusting the bank and trusting a fiat currency was the mistake in the first place, then they won't transcend and evolve beyond this situation.
A lot of Bitcoiners were sounding the alarm about these tokens and exchanges. So where did we fall short, and why couldn't we prevent this?
I think that Bitcoiners have had a very clear vision, and that's because they move forward in a principled fashion. And if you didn't buy the altcoins, if you didn't put your money in a crypto exchange, then you didn't fall short. You did the best you could do for yourself, for your family, for your friends, for your followers. There's been a never-ending campaign on behalf by Bitcoiners to convince people not to trust, run your own node, take responsibility for your own actions, hold your own keys, support an ethical, decentralized, fair, transparent protocol. And I would say that we can look at it as, well, we failed because we didn't convince everybody in the crypto world to adopt Bitcoin. But you can also look at it as we succeeded because we got the most number of people and the most amount of money to adopt Bitcoin. And so Bitcoin is still the dominant crypto asset network in terms of number of holders, in terms of value, and in terms of the amount of value stored on the chain. And so although we haven't convinced 100% of the people to agree with us, we've convinced the most of the people to agree with us. And this week is another educational lesson. And As a newcomer to the space, I've only been in it for about 2.5 years, I observe that we are making great headway with mainstream investors and mainstream media. And we're also making great headway with the crypto bros and all the crypto degens, everyone that said, I got to trade this altcoin, or I got to trade on that, or I need leverage, and they made fun of the Bitcoin maximalist and the ones that want to self-custody. And I think that now you won't find anybody in the crypto industry that would make fun of Bitcoin's principled approach.
Right.
And I think that if you go on CNBC and you look at the conversations are clearly, we can't really be trusting these wildcat, Wild West crypto casinos, and we need to be more responsible. The industry needs to grow up.
It's easy to understand why people would go into the industry, especially young people who feel like they've been left behind by the traditional system, right? They want to get rich. Maybe they want to put money into these tokens, hoping one will take off to eventually put it into Bitcoin as the savings technology. But unfortunately, we see what happens when it implodes. And you see a greater cultural ecosystem behind crypto that needs a ton of education. Is that crypto ecosystem holding Bitcoin back, or is it going to ultimately help Bitcoin adoption?
I think that there are some ideas in the crypto ecosystem which are good ideas that have been poorly executed, or executed in an immature fashion that has been counterproductive. So let's talk about the good ideas. The good idea is a digital commodity that is an asset without an issuer. Bitcoin is the greatest execution of the idea of a digital commodity because it is not just a commodity, it's a scarcity. It's an asset without an issuer that's absolutely capped. The second, and it has a role, right, as a long-term store of value or as a base layer for the digital economy or the entire world economy in the future. There's a second good idea. A digital currency, like the dollar, that can move on an Android phone or an iPhone at the speed of light between 8 billion people in order to allow cross-border payments, cross-border remittances, purchases, and the like. And to give an entitlement or access to the dollar to people in Argentina or Cuba or North Korea or Nigeria where they're without. And so there are probably 1 to 2 billion people in the world that have access to the dollar through the 20th century banking system. There are 6 billion people in the world that do not have access to the dollar. They are disenfranchised, they are unbanked, and they are suffering. So there has been a demand for that digital dollar. It manifested itself in the growth of Tether and Circle. That idea, right, looks a little bit degenerate to someone on the Upper East Side of New York City who's a trust fund baby with a JP Morgan account. But if you're living in Nigeria and the banks can't be trusted and the government devalued your currency and you're looking at starving to death, or the same in Venezuela, that dollar looks to you like a lifeline, and that is really critical for you. So the crypto industry, has spread that dollar and it's moved on crypto rails. It's moved on networks like Tron or Ethereum. Unfortunately, it hasn't moved on the Bitcoin Lightning Network. So the idea is a good idea, give billions of people the dollar, right? The execution is a bad execution. Let's basically use unregistered security and centralized crypto networks to give them the dollar. And now you leave someone in Lebanon with a choice. Do I trust Tether and Tron more than I trust the Lebanese government and my Lebanese bank? And of course, in their case, it's a stark choice. We know the government stole my money and currency was devalued and the bank frees my assets. So they're between a rock and a hard place, and they choose the crypto solution to getting the dollar. Now, there's a third good idea, a digital exchange. When you own Apple stock, the bank only lets you trade it when they're awake and they work 20% of the time, from 9:30 in the morning till 4 in the afternoon, Monday through Friday if there's no bank holiday. And if you want to trade Apple stock on Saturday afternoon, they just don't work Saturday. So a digital exchange works 168 hours a week, right? And that's nearly 5 times as much as banking hours. So the idea that you can get the bank to work for you all the time is a big idea. Also, the idea that I could have a digital exchange on my Android phone or my iPhone in my pocket as I travel through Central Africa is also an empowering idea. And finally, a fourth idea is just property rights. If you own Apple stock, a bunch of it, your bank is able to loan that Apple stock out and get a yield on it, but just not for you. You don't, right? So $1 million of assets sitting in a conventional bank is the bank's assets, and they get benefits from it, but you don't get benefits from it. So the 20th century conventional banking system is constructed to work part-time for its own benefit. And the idea of a digital exchange would be you ought to be able to hold your own assets, get the yield on your own assets, trade and transfer your own assets whenever you want, and do it at the speed of light and do it 1,000 times faster and quicker. So that's another innovation. The last innovation is a digital token. It exploded as NFTs in the crypto world. Okay, the idea that's the ethical idea is you're an artist, a musician, and an actor or an athlete, and you wish to monetize your brand, right? Once upon a time, you have music rights, you want to sell the music rights. Right. There's a famous David Bowie bonds where David Bowie sold the bonds that included rights to his music over time to monetize his art. Well, most people can't sell bonds to monetize their brand. So the idea that I could somehow issue a token that monetizes my brand was interesting to hundreds of thousands of creators and artists and celebrities, right? They were very excited about it because, from their point of view, it's Hollywood and the music companies that control me. Once upon a time, Prince changed his name to to an unpronounceable symbol and went by the artist formerly known as a protest against his record label because he felt, he painted slave or wrote slave on his forehead.
Yeah, they want what's theirs.
Right, and so the people want to own their rights. That's the ethical idea that came out of crypto. The execution of the idea was we're going to do it on a centralized, crypto token network, a Solana or an Ethereum or a something. And the problem is those are all unregistered securities, right? And so if you could take those ideas and you could put them on the Bitcoin network, on Lightning. Bitcoin is ethical because it's an asset without an issuer. Lightning is ethical because it is an open protocol, and the fees that run it are Satoshis. And Satoshis are, of course, ethical money. So if you had an open, fair protocol running on an ethical money, and then you gave tokens to creators, and you gave dollars to people in Africa that would otherwise starve, or they're locked out of the world economy without dollars. And if you gave them Bitcoin as the digital scarcity asset, and if you gave them access to these DeFi ideas and exchanges 24/7, 365, but it was ethical, right? Not only, that's the first check, it's got to be ethical. The second check is it's got to be technically sound. Lightning's technically sound. You could support billions of people and do billions of transactions a day, quick and cheap, technically sound. And then third, it's got to be economically sound. You could create a digital commodity that had an inflation rate of 10% a year forever. It's not economically sound to have a continual inflation rate, like Dogecoin has continual inflation. So Bitcoin is economically sound because it's capped scarcity. It's technically sound because it's layered from the base layer, which is optimized for security, to the layer 2, which is optimized for performance and scalability, and enables layer 3 applications. And I think that as we look forward, what we'll say is, well, the first decade of crypto, they were trying to do all these good ideas, but they were doing them with unregistered securities and centralized banks and centralized exchange and those things, and with poor economic principles, right? And they collapsed they either collapsed because they're unethical and the regulators shut them down, or they collapsed because they're technically flawed, right? And they clog up and they're trying to do everything on the base layer, or they collapsed because they're economically unsound. The next generation of the digital economy, digital assets, people will pursue digital exchanges, digital currency, digital commodities, digital tokens, digital securities. They will pursue them, but in an ethically sound, technically sound, economically sound fashion.
Michael, you mentioned that you've been in the space now for 2.5 years. So I'm curious, what's been the thing that has surprised you the most, and what has been your biggest lesson?
I think what surprised me the most is fairly intelligent people and entities not realizing everything I just said to you fast enough, right? For example, it seems quite evident, right? If you were doing, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage, right? Doesn't make sense, but it surprised me that so many otherwise intelligent people put so much money into these things.
Big institutions.
Why would a pension fund, why would a VC, investor, why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges, and why would they pursue these ideas in such an irresponsible fashion? And sometimes you almost want to tweet, like, people will literally lose $1 billion chasing after these crypto casinos before they'll put $1 million in Bitcoin. It's just fast money, borderline greed, I guess, thinking that somehow Bitcoin is too straightforward an idea. It's like Bitcoin is too honest, too ethical, too rational, and so the conclusion is I have to skip over that and I have to go for the next thing, the next Bitcoin or the next good idea.
I think Bitcoin's boring.
And so that's what surprises me, that people with billions of dollars in education that should know better, when they're granted something which is ethically sound, technically sound, economically sound, and the first perfected money and the first, truly open, fair, decentralized monetary network in the history of the world, when they're staring at it, their reaction is, it's too boring. How do I take another crypto risk? And so I guess it just takes, these billion-dollar blow-ups of Celsius and Voyager and FTX for some of them to start to get the idea that Bitcoin is the innovation, and they should come back to basic first principles.
Well, there are now even bigger reasons for regulators to come in and intervene, look at the space with a microscope. So are you concerned at all that, given this environment of volatility with crypto platforms blowing up, that this will negatively impact Bitcoin's adoption with regulators?
I'm not concerned. In fact, I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators. If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. they will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulator said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit, right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange, and a path to registration of a digital currency, right? And if they said you want to issue Tether, you have to file monthly statements, register with this, banking supervisor, and take on these responsibilities to have these reserves and abide by these guardrails. You can issue a stable coin. If they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do. Then what you would see is a collapse of all the true scams. You would see the VC that have been trying to launch these other things, they would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say, this is too hard. You get the sense that some of them never bothered to hire a lawyer or get a legal opinion, right? It's like, I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the US, but outside the US, the world wants it. So I think you would see some of those. I think you would see some digital securities. I think you would see, you'd probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way because they don't want to risk their reputation. The industry will morph. It'll change. And at the end of the day, Bitcoin will benefit from that too. It's not clear to me which approach is better for Bitcoin. The truth is, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin. And every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse, right? And I don't know what's left, but the argument in favor of a digital security is wouldn't it be great if I could issue it faster and it traded 24/7, 365, and then someone could, like, if you said to me, you can take custody of your Apple stock on your Android phone if you live in Zimbabwe, and I can't get a JP Morgan account, I would think, okay, well, that's good. I can give Apple stock to my friend in Zimbabwe on an Android phone. So maybe the idea of a security circulating on a mobile network outside of the control of the 20th century banking system, maybe that's a good idea. But on the other hand, probably the digital security I want is Apple, as opposed to, all the crypto securities that are out there.
Well, these are the growing pains, and I know that going back to what you said about a teachable moment, it makes me think of the letter that was just put out by Ross Stevens of NYDIG, who talks about what happened with crypto at large, how we need to treat the people that lost money kindly, and he shared a personal anecdote about his own lessons in risk management. You have bought Bitcoin at the bottom as well as toward the top, and so I'm just curious from your own experience, what lessons can you share from all of your experience with risk management?
Well, I think one of the lessons is you have to separate your P&L from your balance sheet. So if the way that you're making money is in Ross's letter, he points out that they make money with 10 different strategies. One of them is Bitcoin. The other 9 strategies are firmly grounded in the conventional economy of the world. So if you're a doctor, you stay a doctor, you're the best doctor you can be, you serve your patients the best, and you maximize your income as a doctor. And then on your balance sheet, you have assets, and on your balance sheet you would have a variety of assets. Whatever property you're going to hold for a long period of time, you could have a diversified portfolio of property of digital property like Bitcoin, and you might very well hold real estate, and you might own a share in a company, right? But separate your balance sheet from your P&L. At MicroStrategy, we have a traditional enterprise software company, and we keep 99% of our employees focused upon that business, which generates substantial cash flows. And that's what allows us to pursue our Bitcoin strategy by sweeping those cash flows into Bitcoin in a form of corporate dollar cost averaging. I think where things get dangerous, which is what happened with FTX, is all of a sudden the way they make money is also their balance sheet strategy. Yeah. And if you're going to have a balance sheet with a bunch of FTT token, and then you're going to use it as collateral to borrow against it to generate yield, when the token collapses, the P&L collapses, and vice versa, and the entire thing becomes a house of cards.
Seems so obvious too.
Hindsight is always 20/20. And then of course, to the extent that you actually take on any debt, you generally want to take debt that is secured against assets that don't get marked to market. Like the best form of debt is I have a mortgage against a house, and the bank's not going to show up at my door and value my house down by 80% on Monday, and then ask me to repay the mortgage on Tuesday. Right? But, use common sense, right? If you were to borrow against a stock, like a liquid asset like Apple stock or S&P index, or even against Bitcoin, you want to be ready for 80% drawdown. And most conventional risk managers, they would, for example, they would never advance more than 50% loan to value. And then when you get close to that, you would think, okay, well, now I got to be ready for a 50% drop from here. Mm-hmm. And so if you have a very conservative view, right, on liquid assets, you would say you never want to go beyond 20% loan to value on a liquid asset, even if you think it's rock solid. Of course, if you're borrowing against a token printed out of thin air, right, like FTT, well, that can go to zero overnight because there's nothing backing it. So I think be conservative with the way that you use debt. Be rational and thoughtful in how you distribute your balance sheet. And then on the P&L side, figure out what it is you can do that is making a unique contribution to the world. And if you're the world's best bakery on this city block, then that's what you do. And if you're a doctor or a dentist, that's what you do. and just make sure you do that thing. And if you're in a currency like a very weak developing nation currency where it's collapsing at 100%, 100% inflation a year or more, you're sweeping your local proceeds, into a combination of dollars that you're going to hold for 12 months, and then Bitcoin that you're going to hold for 12 years, right? And if you think in terms of your long-range asset, your short-range asset, and your immediate currency, then I think you'll probably be in good stead.
It seems to so many of us that a lot of your purpose now has to do with Bitcoin education. Is there anything that keeps you up at night?
I think we need to educate a lot more people. What keeps me up at night is that there are so many mainstream influencers, so many policy makers, so many investors and money managers that still don't understand half an hour or an hour worth of Bitcoin fundamentals. But the world is still full of incredible numbers of people at every level, from the top ranks of our government to leaders, captains of industry, down to rank and file. The world's full of people that don't understand the theory of money. They don't understand what money is, right? They would say, oh, money is a medium of exchange. Okay, so therefore I guess the peso is just as good as the dollar, is just as good as Bitcoin, because they're all just mediums of exchange to somebody, right? And so the lack of awareness of the theory of money, that's something that keeps you up at night. The world is full of people that don't understand the power of an open, permissionless monetary network, right? The fact that you can move $1 million from here to Africa and you could do it in an open rail, and then you could do it 1 million times cheaper than the conventional 20th century banking system, and you could do it 1 million times better, and then you could program it 1 million times faster. So most people, they don't realize that money is technology. They don't really understand what true non-defective money is, because every monetary system in the history of the world has collapsed, and every money that's ever been invented before Bitcoin was objectively defective mathematically and physically. And so because people don't have that fundamental understanding of the physics of money, and they don't understand that money is technology, they're not looking for the solution. They have this massive blind spot. But they do have power, right? The world is full of people with money, with power, and with influence that are ignorant of these two basic principles. And the first principle explains to you why you would want to own Bitcoin. And the second principle explains to you why the future is 8 billion people with devices plugging in via the Lightning protocol to each other to trade and to run the economy of the 21st century. So we have to go and educate those leaders so that they embrace and adopt this physically perfected money and this ethical open network.
Well, one of those leaders with power and money is Elon Musk, who just took over the platform that you use to communicate with so many of your followers. And you've been tweeting at him about things like the verified check marks. What's your message to Elon Musk, and does it have something to do with Bitcoin?
I would say that Twitter is the most underappreciated of the major digital networks in the year 2022. Everybody understands the power of Facebook and Google and Apple and Microsoft and the Instagram and the WhatsApp network. Twitter was that redheaded stepchild, the one that was kicked around, that wasn't appreciated. But at its core, Twitter is the global network for public speech. And if you were a public figure and you wanted to go on the record and memorialize and to verify your speech, Twitter is that network. There's no reason why that network shouldn't be subscribed to by everyone that reads, right? It should have, I think they had 300 million Users, it should have 6 billion to 8 billion users. Let's say 1 billion, aren't paying attention, but why aren't there 5 billion people on the Twitter network, right? And once there are 5 billion people on the Twitter network, Twitter is capable of providing free speech, free, verified, trustworthy speech, if properly engineered. The challenge is the proper engineering, and it is not easy to properly engineer it. We need to be able to trust people or who they say they are. We need to shut down the bots and all of the toxicity on the network. The network needs to be monetized. And so my message to Elon Musk is people are saying you overpaid for it. Not really. Twitter could be worth $1 trillion. Maybe you make 20x your return, but you won't meander into that. You need to obsess over how to make Twitter the most trustworthy speech platform in the world, and that means finding a way to embrace anonymous speakers who want to remain anonymous. How do you embrace corporations? How do you embrace the individual? How do you embrace people in countries where it's dangerous for them to be identified? How do you punish the scammers and the fishers in the box? How do you celebrate high integrity, clear speech? Right? How do you make it easier to find the speech? I can go on Twitter and I can search for something I know I said and I can't find it now. Mm-hmm. Like the search doesn't work. The bots go crazy, right? It's just challenging and difficult, and yet every school board leader and every police chief and every mayor and every politician and every business leader, if they want to say something on the record, Twitter is where they go. So I would say it's a diamond in the rough. You have an opportunity to bring the entitlement of truthful speech verified to the world, but there's a lot of work to do.
Mm-hmm, there is. Where I want to leave this conversation is the idea of money and happiness. Something that Jeff Booth has said before is that people don't want more money. They want the things that money can buy them. And I think about the pursuit of happiness. How happy are you, and has Bitcoin affected that?
I am much happier after Bitcoin than before Bitcoin. I mean, the pursuit of happiness is critical, and I think Bitcoin offers hope, and I've said this many, many times. I dedicated hope.com to all things Bitcoin. If you live in a system where the fruits of all of your labor are converted into a currency which is debased inevitably, continually, and going to zero, you're just overcome by despair, right? And the amount of despair, the degree of despair is just a function of how fast the currency is collapsing. And when you live in a nation where they're living under 100% inflation per year, you realize that everything you do and everything you're going to do is going to be siphoned away from you, right? And it's just hard to be happy, and it's hard to pursue happiness. You could almost say your time horizon is shrunk, and the discount rate, the financial discount rate, has got to be equal to the inflation rate. So when the discount rate is zero, when the inflation rate is zero, the discount rate is zero, when your money will last forever, which is what Bitcoin is, then your hopes, your aspirations, and your horizon is forever. And I could say to you, well, I get up every day to make Bitcoin a success because I know even if I fail, then I will leave a legacy, and someone 1,000 years from now will be happy that we made this work, right? And to the extent that I'm able to siphon energy into Bitcoin, then whatever that supports is going to continue. So I'm pretty energized by that. if you take the other extreme, when the inflation rate is 100%, and that means that everything you're doing is getting cut in half every 9 months or every year, depending on how you do the math, your time horizon is 36 months. I'm gone from this earth. It's almost like being given, you're given a terminal diagnosis. Okay, but it's worse than a terminal diagnosis because it's not just that you'll be gone. It's that your entire state will be gone. Mm-hmm. You don't even get the ability to write into your will, take care of my family and my friends, because it's all gone in 36 months. So in the absence of Bitcoin and in the presence of a collapsing economy, you're just overcome by despair. And in the presence of Bitcoin, it's like the sun comes out and there's light and you can see a path to happiness, right? And the network is greater than you, right? Bitcoin is an ideology, it's a network, and one of the most profoundly ethical things about it is that in the pursuit of making it successful, you're helping not just yourself, but you're helping a lot of people you don't even know. Mm-hmm. You even, in Bitcoin, you even have the joy. I'll give you an example. If you took all the money in the world that you had, mm-hmm. right, and you invested it in a boat, and you took it out in the open ocean, you caught in a hurricane, and the boat sinks, and you die. In the fiat world, that is a disaster and a catastrophe. But in the Bitcoin world, if you invested all your money in Bitcoin and you died, and your private keys went to the bottom of the ocean, you've just made a contribution of your entire estate to the rest of the Bitcoin community, and everyone else is that much richer. And so it's the ultimate charitable pursuit if you were to simply go to the grave with your keys in your head, because you have contributed to everyone that was on that journey with you, pro rata, in an ultimately fair fashion. And if you're not sure, right, instead of you're a batshit crazy relative taking your money and wasting it on derelict pursuits after your death, you've actually contributed your wealth to the most honorable, ethical, responsible people that may not even be alive. Someone that'll be born 100 years from now will benefit from the fact that you simply took your Bitcoin keys to the grave. It's the ultimate privatization and decentralization of charity. Mm-hmm. Instead of having some virtue signaling charitable organization saying you're not a good person unless you give us all your money so that we can use it after you're dead or while you're alive, right? Which is just more of this, kind of unwarranted seigniorage. Instead of that, Bitcoin basically privatizes virtue, privatizes charity, decentralizes all of these things so that you no longer have to depend on the government to think you're a good person. You no longer have to depend on a charity to think you're a good person. You can just be a good person on your own by running a node, holding your key, stacking sats, and going about whatever you want. And that I just see as it is the pursuit of happiness. Mm-hmm.
What a powerful concept. You do so much for this community. So thank you so much, Michael, for joining me. And I know so many people have found purpose through Bitcoin. It sounds like you have as well. Thank you so much for watching our interview. For more information and to stay on top of all of our new content, head to swan.com/hardmoney.